Sun cast a shadow, a digital line is coming over the mountain and over your mind. Double down your Bitcoin, hang on for the ride. We're moving into the future, one block at a time. We're moving into the future, one block at a time.
Welcome to Once Upon a Coin, documenting the ongoing history of blockchain and cryptocurrency. And as always, I'm your storyteller, Jason Cassidy. Today's story is about a blockchain project that came out of nowhere and forced its way into the upper echelon of cryptocurrencies. It's had just as many highs as it's had lows, and now it's looking to make some history in the coming years by becoming the high-performance blockchain of choice for both businesses and consumers alike. This is the story of Solana. Okay, so let's just jump right in here. Solana is a blockchain that offers fast and secure transactions with dirt cheap fees. It was founded by Anatoly Yakovenko, a former engineer at Dropbox and Qualcomm. He was inspired to create Solana after working on wireless technologies that required a high level of performance and scalability. He learned a lot over the course of his career when it came to distributed systems. And one of the things that he learned was that having a reliable clock made network synchronization quite simple. And when synchronization was simple, that often meant that the network could operate at a very fast pace, restricted only by bandwidth. To this end, he published a white paper in November of 2017 detailing his creation around proof of history, a novel way of keeping accurate time between computers that do not trust one another. The basic idea here is that blockchain systems without clocks, such as Bitcoin and Ethereum, struggle to produce large amounts of transaction processing on a per-second basis. Anatoly was confident that he had solved the problem of getting computers that do not trust each other to agree on time. And if he had, it would result in a massive improvement on both the scalability and transaction throughput side.
Proof of history enables the blockchain to work fast while maintaining security and decentralization. Here's an analogy. If snapshots of dye diffusion were scrambled, you would know how to place the resulting images in order again because of the laws of entropy as a function of time. Proof of history uses a recursive verifiable delay function to hash incoming events and transactions. Every event has a unique hash and count along this data structure as a function of real time. This information tells us what event had to come before another, almost like a cryptographic timestamp, giving us a verifiable ordering of events as a function of time. Each node gets a cryptographic clock that helps the network agree on time and ordering of events without having to wait to hear from other nodes. Unlike slower, traditional blockchains, oftentimes throttled by various consensus mechanisms, Solana achieves high throughput without sacrificing network security.
The next logical step was to build a prototype and to put this theory to test in a real environment. Anatoly's friend, Greg Fitzgerald, who he had worked with at Qualcomm, agreed to help him bring his idea to life. They began working on a prototype together in February of 2018, and by February 28th, they were now ready with their first release.
It's alive!
They were able to demonstrate that 10,000 signed transactions could be verified and processed in just under half a second. Not bad at all. Soon after, another friend of Anatoly's from Qualcomm, Stephen Ackridge, showed him how transaction throughput could be greatly improved by assigning the verification of signatures to graphic processors. Anatoly had seen enough. He quickly formed a company that included Greg, Stephen, and 3 other team members. They initially called their project Loom. However, right after this, another project with the same exact name popped up on the Ethereum blockchain in the form of the Loom Network, a layer 2 scaling solution. Not wanting to complicate matters for both project teams and potentially confuse everyone with 2 different looms, Anatoly and his team decided to rebrand their project to Solana. The name change was a nod to a favorite beach town called Solana Beach, where Anatoly, Stephen, and Greg surfed together while they were working at Qualcomm. The Solana project was now officially born with the founding of Solana Labs, which would oversee the creation and maintenance of the Solana blockchain. These guys didn't waste any time, let me tell you, because the very next month, in March of 2018, Solana conducted a Series A investment round led by Multicoin Capital. They raised $20 million via a series of private token sales which concluded in July of 2019. While the token sales were taking place, the team was busy with the development of the Solana blockchain, going through various testnet builds while adding in new features and working out some kinks. By March of 2020, the team was able to release a beta version of the Solana mainnet. It came with limited functionality around transactions and smart contracts, but it was still enough to show the potential of Solana. The team was able to use all the excitement around this launch to their benefit when they raised an additional $1.7 million in a public token sale, which came in at just 22 cents per token. This is probably a good time to introduce Solana's native token to you, which goes by the name of SOL, and its ticker symbol is SOL. Just like other popular blockchain networks like Ethereum, if you want to take part in the ecosystem, you're eventually going to want to own some of the native token, and Solana and SOL are no different. A month later, the team launched the Solana Foundation, eventually making the announcement that Solana Labs had transferred all IP related to the protocol over to the Foundation, including 167 million SOL tokens. Simply put, the Foundation's mandate was to advance the adoption of decentralized technologies within the Solana ecosystem. The Foundation wanted to ensure that they had a top-flight project to launch in the early days of the blockchain going live. This is something that they could then point to showcase the benefits of building on the Solana blockchain versus other networks. The project that they were looking for turned out to be SERUM, a decentralized crypto exchange that focused on making DEXs just as user-friendly as the traditional centralized exchanges were. The plan was for SERUM to serve as the centerpiece of the Solana blockchain, and on October 31st, 2020, the SERUM exchange debuted. Things were looking good for Solana going into 2021, considering that they were now live and had the benefit of a bull market about to supercharge them. This was visible in the token price, which began moving up fast, hitting the $50 US mark by May. It was also helpful that Solana was able to get their token listed on some of the biggest exchanges in the world around this time. Looking to capitalize on the incredible amount of wealth that the SOL tokens now represented, the team sold $314 million worth of SOL to heavyweights like Andreessen Horowitz and Polychain Capital. In addition to being flush with cash, Solana was also now seeing some serious projects decide to start their journey out by launching on the Solana blockchain. Two such examples of this are Mango Markets, a decentralized exchange that was able to raise $70 million US in just under 24 hours, and Radium, another decentralized exchange that focused on decentralized finance or DeFi, with their goal in bringing this new innovation to the masses. Solana also got involved in the NFT or non-fungible token sector in a big way, and this was arguably the catalyst for the entire kickoff of the great bull market of 2021. Markets like SolanaArt, SolSea, and Metaplex all showed up to help Solana users take part in the NFT bonanza. This helped create a new level of hype, as people began to see Solana as a progressively new alternative to Ethereum, Tezos, and other top blockchains. All of this good news had a compounding impact on the price for Solana, pushing the SOL token to an all-time high of $260 US by November 6, 2021. If you've been keeping tabs, then you may be shaking your head in disbelief right about now, given that ICO investors paid relative pocket change for the token at just 22 cents US a year and a half prior. It's hard to imagine things going any better for Solana, as seemingly everything they touch was turning to gold around now, with even King Midas himself giving them a golf clap at this point. But, as the saying goes, easy come, easy go. Solana had come out of the gates playing the role of the proverbial hare, while most other projects were now looking like the tortoise in comparison. With no more room left to pump to the upside, Solana was destined to come back down to earth, with gravity now finally setting in. And did it ever. The bull market was running out of steam by early 2022, and Solana was not immune to the chill of the coming crypto winter. By the end of January, the price was already under $100 US per token, and engaged in a rather ugly free fall from there. As July approached, the token was now under $40 US. And as if that wasn't bad enough, something much worse was about to happen. Unlike the bear market, which was impacting all projects and couldn't be blamed on Solana, some pretty nasty developments did begin to take place, and this time, the blame was squarely placed on Solana itself. The first salvo came in the form of a class action lawsuit against the project, being accused of selling unregistered securities stemming from a token sale back in March of 2020. They were also being called out for deliberately misleading investors regarding the circulating supply of the SOL token. According to the lawsuit, Anatoly Yakovenko, Solana's founder, decided to lend more than 11.3 million tokens to a market maker back in April of 2020, but decided not to disclose this to the public. The lawsuit went on to state that Solana promised to reduce the supply by this amount, but only ended up burning a total of 3.3 million tokens. Naughty. While the collapsing token price and lawsuit were all kinds of bad for Solana's image, this wasn't even the worst news. Not even by a long shot. One of the benefits of blockchain is that it's a clear-cut, superior alternative to the traditional centralized systems that we've all grown up with. Reliability is one of the big selling features of blockchain technology, especially when it comes to top-tier networks like Solana that encourage real businesses with real customers to build on top of their blockchain. Well, as you're about to find out, Solana and network outages were two peas in a really shitty pod. Solana began to experience frequent downtime as its network basically fizzled out, leaving apps built upon it in limbo while giving users just about the worst customer experience you could imagine. Visa and MasterCard, Amazon, even your traditional bank, they all eventually have outages. But for the most part, those are few and far between, and when they do happen, they're often resolved very quickly. Solana crashed so often that it started to become a running joke in the industry, with people either being able to see the humor in it if they were a bystander, or becoming royally pissed off if they had a financial stake in the project. To give you an idea of just how bad this issue became, in 2022, Solana experienced 11 major outages and 3 minor outages. The downtime ranged from an hour and 15 minutes to over 17 hours. Can you imagine if this is a common occurrence for American Express, PayPal, or HSBC? So common an occurrence was this that people began to come forward and offer their thoughts on Solana's flaws that helped contribute to all of this, hurting its image. The basic premise here was that Solana, as designed, couldn't handle periods of high transaction throughput. And with each outage, more and more press started to be generated around it as everyone started to wonder, when would Solana crash next? Now, if you're thinking things couldn't get any worse here, well, I got news for you. They actually did. And that's because in November of 2022, nightmare fuel was added to the bear market with the FTX implosion, which took many projects down with it. And the blockchain network that received the most praise, advocacy, and market support from FTX? Yeah, that was Solana. As the details around FTX's crimes against the crypto industry came to light, concerns around market manipulation of other tokens began to circulate, with Solana being the prime suspect in these conversations. The combination of the unprecedented fraud that FTX engaged in, coupled with the fact that Solana was a major holding of FTX and Alameda Research, was more than enough to cause serious pain for the SOL token. People were now realizing that the crazy price increases that the SOL token experienced in 2020 and 2021 was, at least in part, due to the shenanigans of FTX. Confidence was evaporating. So bad did things get that by the end of 2022, the SOL token was trading at just under $10 US, making for a stroke-inducing 96% loss in value from its peak that was reached in November of 2021. To put things into perspective, this is one of the biggest pullbacks in value for a top coin during this market correction. To offer even more perspective, at its peak, Solana had managed to do something that no one thought possible at the time: get into the top 5 cryptocurrencies when ranked by market cap. After this fall, though, it was struggling to even maintain a place in the top 20 cryptocurrencies. As 2022 mercilessly came to an end, the Solana team, along with its sizable user base and companies built upon it, was hoping the blockchain's New Year's resolution would be just stop shitting the bed for a while. Yeah, that didn't happen. And that's because on February 25th, 2023, Solana went down for the umpteenth time, except this time it stayed down for almost 20 solid hours, making for the worst network outage in its history. The company tried to shake this off though, and countered by dropping some news that did get people talking about them for all the right reasons for a change. By the time spring came around, Solana announced they were coming out with their own smartphone, called the Solana Saga. This is an Android device with a crypto wrapper around it, making it Web3 compliant, helping users enjoy the same seamless experience they have on laptops and PCs. Apple and Google have made it very difficult for Web3 apps to gain traction, often forcing them to make major compromises just to get their apps listed in the app stores. Solana was looking to change this all, announcing that the phone would go on sale in May and have a sticker price of $1,000 US. It's fair to say that Solana's history so far has been one of major peaks and valleys, perhaps more so than any other blockchain in the world. But unlike Terra, who had a similar rags to riches to disaster story, at least with Solana, they're still in the game. It started to right the ship on the network outage front too, having less of them, and when they do occur, often resolving them pretty quickly. They aren't out of the woods just yet though, as it was recently revealed that FTX holds $1 billion worth of SOL tokens and will soon have to liquidate them as part of their bankruptcy proceedings. The hope is that this massive amount of dumping the market has to absorb won't hurt the price too much. But this is crypto, and in a bear market, liquidity can be hard to come by, so we'll have to see how this one plays out. Overall though, Solana does appear to have got past these early issues, so there's reason for optimism going forward. If they do try to succeed long term, they'll have to mature past the point of having network outages. I mean, any of them. No serious business with an active user base and revenue stream will move over onto Solana if this is still happening. And new businesses will likely be worried to make such a commitment in both time and money to build on something that could be construed as quicksand. But if you do think this could be the new Ethereum killer with its plethora of DeFi, DEX, and NFT apps, then you should probably take a look at what Solana could do for you. Whether that's an investment into the token, the ecosystem, or just trying out the apps as a user, you could do a lot worse. I hope you've enjoyed today's stroll down memory lane. Until next time, have fun and enjoy life, my friends. I'll be back soon with another incredible story to tell you.